The ripple effects of U.S. President-elect Donald Trump's trade policy are being felt even before his actual return to the White House. And for South Korea, the impact has been far from pleasant, with its currency weakening against the U.S. dollar and its stock market losing much ground. We have more on Press Perspective today. Hello and welcome to Press Perspective for this Thursday, November 21st here in South Korea. I'm Min Sunhee. Anxiety was the word used by one scholar on our show this week to describe the atmosphere within multilateral economic frameworks as they await the return of the Trump administration in the U.S. next year. For more on the broader economic implications of former President Donald Trump's return, I have Sam Kim, a journalist for Bloomberg, here in the studio. Sam, it's a pleasure to have you with us.
Pleasure.
I also have Professor Yang Hee-dong at Ewha Womans University live on the line. Professor Yang, welcome.
Thank you for inviting me.
Right, Sam, we'll start here in the studio. The Associated Press says Mr. Trump's pick for Treasury Secretary will provide onlookers with a better understanding of his tariff plans. That being said, who are the contenders as we speak and what do they indicate?
Well, as far as I understand, there are a few names being floated right now, including Apollo CEO Mark Rowan, Senator Bill Hagerty, Key Square founder Scott Bessent. Whoever becomes the pick ultimately, which we're going to be hearing in a day or two possibly, is likely to be what I would describe as the face of Trump's economic agenda, meaning that he or she is going to lead the discussions within the government, also discussions with the parliament there on important topics like debt issuances, because the U.S. is almost annually constantly worried about the debt ceiling. There's so much debt that has been printed, and the ceiling has to be lifted every year. And that person is going to lead the government efforts on that. And obviously, some of the other Trump agenda, including tariffs, are going to be, basically on the shoulder of that person. So I would see this as the face of Trump's connection with Wall Street, investors, businesses, just total package, basically. So it's going to be quite important.
All right, and speaking of Wall Street, veteran Wall Street corporate leader and billionaire investor Howard Lutnick has been tapped as Commerce Secretary. What can we expect in terms of trade?
Well, certainly we've been hearing a lot during the campaign about these universal tariffs of 10% against all trading partners, and in particular 60%, which is a pretty whopping number, against China in particular. That has to do with the fact that Donald Trump does not really like the fact that there's a lot of trade deficits against these countries. China and Mexico are the top two nations with the biggest trade surpluses against the U.S. And South Korea happens to be, I think last time I checked, it was the 8th on the list. So it's not huge, but it's not small either. So what I think we could expect from the new Commerce Secretary would be his kind of leading the tariff agenda and basically being at the front of the negotiations with these trading partners to make sure that they're going to be able to impose all these tariffs. And then part of the agenda would be bringing more jobs to the U.S. via more what they call reshoring, meaning that a lot of companies abroad would be asked to set up their factories in the U.S. to promote jobs. So that could be part of the agenda we can expect.
Right. Professor Yang, broadly speaking, and based on what has been shared thus far, what do you believe are perhaps some of the major differences in economic policy between Mr. Trump's past and future administrations?
Well, I don't see any big differences between the Trump, the first and second period, because the economic policies of the Trump government, about in the year 2016. Were characterized the two major features. The first one is he tried to enhance the market orientation. So he tried to reduce the corporate tax from 35% to 21%, And also, he was one of the very rare the president who tried to lower the government regulations. The major purpose for this, the market rent deregulation, is to repatriate all the overseas investment. So, for example, in the year 2018, I mean, 3/4 of the overseas investments were repatriated back to the United States. That led to more employment of the workforce in the United States. So everyone was really happy during the first period of Donald Trump government, the tenure. But the major negative effect of his government, the economic policy in his first period was he applied, you already know, they applied some very high tariffs, for example, 20% for steel, 10% for aluminum, etc. That led to increase of the imported goods that also damaged the local price, the indexes. So his economic policies had the pros and cons in terms of living conditions for the local people. Almost same in the second period. He declared as the right now, he declared to apply, 10% of the universal tax on all the imported goods, and 60% for the Chinese products. And he also tried to cancel all of the Biden's the policy about the green economies. But the only difference between first and second period is his international politics. I mean, United States is very, very famous for the U.S. isolationism, but now he has two wars to deal with, one in Israel, the other one in Ukraine. So he had no choice but to get involved with the leaders of those two countries. So somehow he needs to get involved with the international talks that may, cause some trade-off between those two countries in terms of economic effort. And besides, he wants to keep the interest rate lower because everyone in the United States pushes to lower the interest rate. But, if he reduces the corporate tax, then he needs to compensate for the loss of government income by issuing more government bonds that may lead to increase of national interests. So, I mean, all these issues really, cause more challenges for the economic policies of the Trump government.
Right, and speaking about challenges, Sam, Bloomberg recently conducted a survey of economists who forecast a drop in South Korea's economic growth amid Mr. Trump's return to the White House. Could you tell us a bit more about that particular survey?
Yeah, I was actually surprised to find out from our team that does these economic surveys that survey was done before Trump's election, meaning that the economists were already becoming much less optimistic about Korea's economy even before Trump won the election by a landslide. Now, the IMF had its Korea mission chief visiting Korea earlier this week, and there was a press briefing yesterday where he said Korean economy would grow, as far as if I remember correctly, 2.2% this year and 2% next year, which happens to be in line with our own estimates. Now, you might say that's not too bad, 2% growth, but that's still a revision down by, I think, 0.23 percentage points, which is a sizable drop in my view. And that has to do with the fact that the export rally that we've been seeing in Korea for the past year is starting to soften. I just wrote, as I was coming from the office, an article about South Korea's 20-day trade data showing that semiconductor exports are okay. Shipbuilders are doing okay too, but exports of wireless communication devices, meaning smartphones, automobiles, these things are falling compared to a year earlier. So we're seeing the softening, and the economic growth is likely to soften as well.
Right, and speaking about falling, Sam, the local bourse itself has lost substantial ground amid news of Mr. Trump's election. What is the state of the Korean stock market as we speak?
It's really a perfect storm right now. It's happening because, as I earlier told you, the export rally is softening. And there's a lot of questions about how long the momentum in chip exports is going to last as well. So there's growing pessimism about chip companies, including Samsung, which happens to account for about, as far as I understand, 30% of the entire KOSPI main index, right? And then you have the Trump trades, meaning that a lot of money or a lot of investors want to go to the U.S. expecting there's going to be all these Trump policies that are conducive to bringing more money back onto the U.S. soil. So they are betting that the local currencies are going to continue to weaken, meaning they're selling Korean stocks to take that money to the U.S., and that's just creates what I would call a perfect storm.
Right. Professor Yang, why does the Korean stock market appear to be so highly vulnerable to Mr. Trump's return?
As I already mentioned, Donald Trump wants to compensate for the loss of government income through the reduction of corporate tax by issuing more national bonds that leads to increase of the market interests. If the market interest increase in the United States, less of the overseas fund or the liquid money will flow back to the United States. So that means, all those the overseas foreign investments on Korean stock market will sell out the Korean stocks and move their funds back to the United States. So that's why we had some, Korean stock market index deployed somehow in the recent days. What is a more serious problem with the Korean stock market is about new economic policy of the Donald Trump government. For example, he seems to cancel all the subsidy policies for semiconductor industry. Samsung, for example, electronics had invested over $60 billion in the United States until the year 2030. And the President Biden promised to provide the subsidies up to about $7 billion back to Samsung. If Donald Trump canceled the subsidy plan, I mean, all the investment, particularly the Korean semiconductor company will become the victim of the changes of the economic policies triggered by Donald Trump. But we have a very positive effects as well. For example, the first one is the shipbuilding. Donald Trump made a call to President Yoon to enhance the cooperation between the American and Korean military, the corporations, because it's really urgent for American Navy, Army's forces to enhance their remanufacturing or rebuilding their ship forces. And so that's why we had increase of stock prices of Hanwha Ocean, HD, Hyundai Heavy Industries, and etc. And another beneficiary from its policy is defense militaries in the United States, in Korea. So these are two major the beneficiaries from the Donald Trump. Well, we also have some victims, the very promising victims from the Donald Trump. The first one is, as I said, the automobiles, the Hyundai Motors. They're all the exports. Almost half of the export are focused on the United States. If the United States try to, charge the taxes, all the import goods like 10%, 20%, I mean, Hyundai Motors had to increase, their retail prices that may lead to reduction over their sales in the United States. Besides, Hyundai Motors is ranked number 2 in the electric the vehicle market in the United States. And if the subsidy reduced for the vehicle in the United States, Hyundai Motors also became the victim of this one. And so another victim is battery industry. So, I mean, there are pros and cons from the economic policies of Donald Trump.
Right. So while cars and batteries are victims, as Professor Yang was saying, the shipbuilding industry as well as the defense industry are looking to benefit from Mr. Trump's policies. Another platform that is benefiting is the cryptocurrency markets. It's been flourishing in recent days. How do you explain this phenomenon? What are your prospects for the future with regard to the cryptocurrency trading market?
I'm certainly not, someone who is proficient in that area to be able to comment on the prospect of it, but the rally has certainly been quite a phenomenon, mind-blowing, I would say. And I would have to tie that to Trump trades again. Mr. Trump basically pledged during the campaign that he would make the U.S. the Bitcoin capital of the world, and that the U.S. government would build a strategic reserve of Bitcoin. Now, there are not many details that have been divulged about how he plans to implement that, but there's a lot of expectation that there's going to be demand for Bitcoin throughout the world. And that's one way for, I think, a lot of investors outside the U.S. to be kind of putting their money where their local currency isn't. So there's a way of buying dollars, but if that's not so available, I guess a lot of investors could still turn to Bitcoin. And I think that's pretty much what's happening. But I certainly am not an expert on this, so don't bet on it.
But we still appreciate your insight. And Professor Yang, before we delve any further, when talking about the cryptocurrency market, we hear a jargon being thrown around quite frequently. It's the Kimchi Premium, so to speak. Could you tell us what that is? And also, there's a bit of talk about the plunge in Kimchi Premium as we speak.
Yes, it's true that Kimchi Premium means Korean cryptocurrency, Korean market is relatively more expensive than the same cryptocurrencies in the overseas the marketplaces. Well, major reason for this high Kimchi Premium is just Koreans love this kind of speculations. So in 1 year, so about 3 to 4 years, the Kimchi Premium even rise up high to 50%. In other words, the price of same cryptocurrencies used to be 50% more expensive, right, in the Korean the marketplaces than in any other overseas market. But nowadays, this Kimchi Premium used to be negative. I mean, even a couple of weeks ago, now is just they're hovering around 0 or 1%. Why is that so? I think one of the major reasons is the strong dollars. Now, the exchange rate between Korean won and the dollar got aggravated by almost 20% in the last 1.5 years. That means unless you earn 20% more through Kimchi Premium in Korean market, and after you sell out the cryptocurrencies in Korean market and change it to US dollars and transfer it back to the United States, you cannot make sure whether you are making money or not through this transacted cryptocurrencies in Korean marketplaces. So that is one of the critical issue, whether the foreign investors wants to move their money into Korean marketplaces to transact the cryptocurrencies in here. So unless we recover this weak Korean won and the strong dollar problem, and Kimchi Premium will not be recovered in the Korean marketplaces. I'm not saying the Kimchi Premium is desirable. What I'm saying is Kimchi Premium is hardly to be seen in the near future because, again, the interest rate in the American the financial market will hover around a pretty high, relatively higher than that of the Korean market. That may observe the overseas the liquidity of the monies, so hot monies. So unless the United States lower the interest rate, I mean, the financial market in the United States will be more attractive than in Korea. So that is a major reason why these hot monies will never try to get back to the United States by selling the cryptocurrencies in Korean market. So Kimchi Premium is hardly recovered in the very near future. That's my expectation.
Right, I see. And as Professor Yang mentioned, Sam, concerns have been raised about the weakening Korean won against the US dollar. What is the latest on that front?
Well, last time I checked, it was hovering just under 1,400 won per dollar, which is pretty elevated compared to what we've been seeing over the last decade. I mean, also, sorry for continuing to refer back to the Trump trades, but a lot of money going into the U.S., meaning people are just buying dollars, shedding local currencies. And the won weakening has been part of the phenomenon. So a lot of policymakers that I get to meet kind of want to downplay how serious this is. Although they do understand that it's a serious issue, it's not only the Korean won that's suffering right now. It's pretty much every other non-U.S. currency that's weakening. So, but what people are feeling positive about is that Korea happens to have one of the biggest U.S. dollar reserves in the world. As far as I remember, it might rank 8th or 9th. So they have the wherewithal or the firepower or ammunition to step in to make sure that the won doesn't weaken further. But policymakers are always very discreet when they step in. And they will step in when it gets worse enough so that it starts to impact the import prices of things that Korea buys, from food to energy, because that would mean weaker currency raising the prices of things that people buy here, which is certainly is not good for the economy.
Right. And policymakers here, they are preparing, of course, for a shift in U.S. leadership. And that being said, what aspects of Korea's efforts to better prepare for a second Trump administration have been garnering attention within the foreign media?
Well, some of my sources have told me that part of the plans, contingent plans that the South Koreans have with Trump in office would be considering whether they would buy more U.S. energy. That is because one of the things that Donald Trump is quite upset with is the fact that a lot of these countries have huge trade surpluses, which is actually not a good thing for the U.S. in his view. So in order for South Korea to make sure that it doesn't get too high on the radar for Trump, they need to reduce their trade deficit with the U.S. so as to maybe possibly drop out of the top 10 nation list that I just told you about. And one way to do that effectively would be to buy U.S. gas, energy, oil, so that it would also benefit the industries here as well, reduce the deficit with the U.S., makes it easier for Korean negotiators to go to the table with U.S. policymakers and say, hey, that's what we're doing. You know, our deficit is sort of shortening, narrowing, and we're investing a lot as well. We had an interview with the finance minister last month, and then where he said we're going to continue to put investment in the U.S., meaning we're going to be part of the force driving hiring there. So they're trying to take this into an opportunity from sort of a crisis right now. Yeah.
Right. So buying U.S. gas, of course, is something that Europe is also thinking about doing, especially with the situation with Russia in Ukraine, of course. All right. I'm afraid that's all the time we have. Sam, thank you so much for your time and your thoughts. And Professor Yang, as always, thank you very much for your insights today.
Thank you.
Right. Well, on that note, we end this edition of Press Perspective. Thank you for watching. See you same time tomorrow.